Greetings, everyone. This is Eric, founder and CEO of Cubicle Investing. Definitely check out the website at cubicleinvesting.com. So what you're looking at here is a posting that I put out to my Flip That Option community regarding my results for 2024. So today is January 1st, 2025. Happy New Year. And so essentially I said that, of the 358 trades that I put on in 2024, I was successful at 288 of those trades. So roughly, I achieved a 80% win rate for 2024, mostly trading the SPX. Now, in the past, I've actually put on more than 800 trades per year. But over the last year or so, I've been primarily focusing on just the SPX. So I think I pretty much mastered, if you will, the SPX. And so this year, 2025, I'm going to be trading a lot more underlines than just the SPX. And also I mentioned previously that you guys might want to look at, for those folks who do zero DTE trades on the SPX, you might want to consider adding the RUT, the Russell 2000, to your arsenal, because, but it doesn't move as quickly and as abruptly as the SPX does. Now, also, it's not as liquid as the SPX, but the RUT is pretty easy to figure out if you just do some research over a month or so, just looking at the price action of the RUT. But nonetheless, yeah, so 80% win rate last year, primarily trading the SPX. But again, I'm going to be trading many more underlines than just the SPX this year. And as you can see here in this image, I actually have these current positions on NVIDIA, MicroStrategy, Coinbase, Palantir, and also the RUT, right? So again, I'm going to be trading more than just the SPX. And also I'm going to be doing a lot of cash secured put options where I'm willing to be put to stock because my account size has gotten a lot bigger, right? Because I've been steady growing my account over the years. And so, having cash secured, selling cash secured put options on well-established companies that you wouldn't mind owning, makes it very difficult to lose money. Of course you can still lose money, but we know that NVIDIA is not going to zero. We know that MicroStrategy, which is a proxy for Bitcoin, is not going to zero, etc. So you sell cash secured puts on stocks that you're willing to own and on well-established companies. Otherwise, you do credit spreads. So the question becomes, Eric, so how have you been able to be so successful trading primarily the SPX? Well, I've done some research, right? And so based upon my research, what do I know about the SPX that has allowed me to, over the last 2 years, have a 80% or more win rate? Well, over the last 23 years, looking at historical data on the SPX, I noticed that the SPX rarely moves on any given trading session, rarely moves 60 points above or below the opening price. Secondly, based upon the research that I've done, I've noticed that the range of movement, and when I mean by the range of movement, meaning the high and the low for each trading session, the difference between those two numbers, let's say the high is 100, the low is 50, well, the range of movement would be 100 minus 50, which is 50, right? So over the last 23 years, 95.5% of the time, the range of movement for the SPX was less than or equal to 70 points. Right? That's the second thing. Third, it rarely finishes the trading session. When I say it, SPX, right? It rarely finishes the trading session beyond level 3 on the put side or call side. So what's level 3, Eric? Well, I'll show you what level 3 is here in a moment. And also, of course, you guys, I mean, for those of you who trade the SPX, you should know that the SPX is essentially a proxy for the 11 sectors that make up the SPX, right? And so those 11 sectors are not created equally. And so you have sectors that have a larger impact or a larger influence on how the SPX moves. So those sectors would be XLK having the largest impact or influence on how the SPX moves, which is roughly, it has like a roughly 32% impact or influence, followed by the XLF, which is the financial sector, which has roughly a 12 to 13% influence or impact on how the SPX moves. And then lastly, you have the XLV, which is healthcare, right? So it has about an 11 to 12% influence on how the SPX moves. And you could probably add it in the consumer discretionary, which is XLY, which has about close to the same impact or influence as XLV. Oh yeah, I have it here. I'm sorry. I have it here. Yeah, and so in that order, these 4 sectors actually influence or impact how the SPX moves. And so I'm constantly monitoring how, you know, these 4 sectors are moving during any given trading session. So now I mentioned level 3, right? So every day I look at the expected move for the SPX for the next day's trading session. And one of the ways you can find the expected move, you can go to barchart.com's website, go to SPX, and you can go to see where it says expected move. You can go to the expected move, and they actually give you the expected move for each expiration date. So that's one way you can find what the expected move is, right? And so every day I create for my members, and I send out every day 3 levels on the call side and 3 levels on the put side. And again, based upon my research, what I've noticed is that the SPX rarely finishes the game or finishes the trading session beyond level 3 on the call side or the put side. Now, it may actually breach level 3 on either side, but normally it will come back below level 3 on the call side or above level 3 on the put side. And so level 1 is just 1 times the expected move. Level 2 is 1.5 times the expected move. And level 3 is 2 times the expected move. Okay. And so it also always includes the opening price every day, and then 20 points above and 20 points below the opening price. Because for me, I don't look to put on a trade on the SPX unless it has moved 20 points above or below the opening price. Okay. And so also I highlight 60 points above the opening price and 60 points below the opening price. Why? Because as I mentioned before, rarely does the SPX move 60 points above or below the opening price. And so that information, and again, so I'm always looking at it, here are my 11 sectors that make up the SPX. And so I'm always looking to see the percent change of those 4 sectors that I mentioned that heavily influence how the SPX moves. Primarily XLK, because that has the largest impact, which is the tech sector, right? That has the largest impact or influence on how the SPX moves. And as you can see here, the top 10 holdings of XLK, which is an ETF, of course, you know, we got the big dogs. You got Microsoft, Apple, Nvidia, Broadcom, etc. So it makes sense that the XLK would have the largest influence on how the SPX moves. But again, I would actually encourage you guys to look at the RUT as well, because the RUT although it's not as liquid as XLK, uh, it does not move as quickly and as abruptly as SPX does. And so once you get in, and if you understand how to trade the RUT, then it's almost like printing money. So again, I've been able to, so this information here, and also let me include the looking at the market internals, right? So looking at the market internals, always keep those open. And so I need to see exactly what's going on with the tick. And so the tick just tells you the number of stocks that have ticked at least 1 cent up or 1 cent down. If there are more stocks that are ticking up, then you'll see, of course, you'll see a green bar. If there are more stocks that are ticking down on the New York Stock Exchange, then of course the bar will be red. And so, and I also monitor the volume and also the number of stocks that are advancing minus the number of stocks that are declining on the New York Stock Exchange. And so these three indicators help me to monitor what's going on with the SPX. And again, I use this in conjunction with this information here that allows me to be successful at trading the SPX. Now, I could have actually had a higher win rate with the SPX, but some of my positions I had to roll. And what I noticed last year was that those positions that I had to roll and hold overnight, oftentimes I'll have to close those positions out for a loss. So I try really hard not to put myself in a position where I might have to roll a credit spread. But sometimes, you just have to roll in order to fight another day. But what I've noticed for my own personal trading is that when I hold positions overnight, they often, not often, but sometimes they can go against me. So hopefully this has helped you guys out. For those folks who are primarily trading the SPX, hopefully you have been able to garner some insight from this information.